So, for those of you who don't know Shriram sir is a trader for the last 30 years or more, I guess. He has been a broker and is trading his family office right now, I believe. Right, sir. I think you are doing trend following and trading cash stocks, options, I guess, all these instruments, right?
Correct.
Correct, correct.
Yeah,
Awesome,
yeah,
awesome.
you're right. I think one of the persons, as I see in the whole list, I think Prashant knows me well. I think we have interacted for the last about 15, 20 years, Prashant. I suppose that's how I think it is. Uh, I was a chartered accountant basically, Astos. I was educated as a chartered accountant, a qualified chartered accountant, and practiced for about 14 years. And I quit practice after Manmohan Singh put out the budget under Mr. Narasimha Rao. It was in 1991, I think. Uh, I started my commercial enterprise in Chennai. I was basically from a small town called Salem. So from there, I moved to Chennai. I mean, we used to call this Madras. So Madras is the hub for a long time till recently when it has been upstaged by Bangalore and Hyderabad. Uh, I started my life as a Madras Stock Exchange member. Then we acquired, as a group, we acquired a National Stock Exchange membership. Then we moved on to MCX and BSE and whatnot. Okay, and then I got tired, and I think in 2010 I made a very big statement telling that we are competing with technology. So ours is not technology driven. So either we move with technology or I quit this business. Uh, so I made an offer. So I said that I will buy you all out at 10% premium to the NAV and pay you immediately, or buy me out 10% discount. 6 months time you can pay me out. They chose to pay me out. So I quit my broking membership. My earlier avatar, it was called Reliable Stocks and Shares. I mean, even now they are members, but of course it has become a individual membership from being a limited company. Uh, Thereafter, I think between 2013 and 2021, or even 22 March, I was associated with another broking membership which we floated with our monies that we received from our earlier thing. In 2022, I think we decided for once and for all we will close down all broking efforts, and that it's not worth it. It's more of a compliance and more of a SEBI driven uh, venture. So we said okay, we will close down and we will prefer to be with other brokers. So we had of course a lot of friends in Madras where there were members who were ready to take us in without any issues. So we as a group we moved to them, and that's the sum and substance of thing. Besides this, I have a couple of other ventures. One venture recently had been uh, 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 promoting a gaming venture, which
Stock
is
sports. Yeah.
stocksports.in. That's a gaming venture. I mean, we it's on the test run basis. Last about 15 days, it is running on a test trial run basis. It will be launched soon. Very soon, it will be launched. Basically, we are going to combine an education-based gaming from where you will be able to uh, do some kind of study and then invest or trade in market like that. So that will be out. So this is the in a short thing. This is what it is all about. I had been in market right from 1984-85. My first investment has been in a convertible debenture issued by Premier Mills. So the story runs like that for quite some time. I had been investing. I mean, almost all the time I had been investing our own monies. For a very short period, we tried with outsiders' money. I think it was a big problem between 1992 and 1995. It was a big problem. So we returned the money and we closed out everything. And we are presently I'm only with our own family money. So no other outsiders' money being handled. Last about 10 12 years we are almost we are returning about between anywhere between 23 and 26% returns year on year every year. Our model is capital will be specified by year beginning, and the returns will be distributed at the end of the year. You save, you pay your taxes, you save, and then you return, and then we can on a mutually agreed basis the AUM, or the money that is to be handled for the year will be determined by April, and it will be taken up for trading for that year. So we are decently progressing. I think we employ, as you said, trend following methods. We our time frame starts from 3 minutes to almost about 4 hours time frames, and we also trade in options. We trade in straddles. These are all the activities, but let me tell you, the whole thing is that we are absolutely very conservative about our leveraging. So on an average over 200 220 days trading days in a year, mostly we will be about 1.5 to 1.8 leveraged. Beyond that, we don't leverage. Occasionally, very occasionally, because of options being traded, we may be exceeding it towards 2 to 2.25, but average means it will be a thing that will be an outlier. So the the longevity of our trading life has been mainly because of lower leveraging. I think Prashant here will say that you should leverage further down and you should do only one time leverage. But then I think that's all right. 1.5 to 1.7, we had been very comfortable. We had been, our drawdowns have never touched wood. It had never been beyond about 8 to 9%. So we are comfortable with our trading methodologies, trading strategies, and the trading systems. So all in all, I'm 67 now, so uh, I'm in the market for the last about 35 years, from 87 to 22, 35 years. Uh, Not yet decided to really call it a day, but then several times I had been thinking about calling it a day, but then since I could not resist being in the market and the midst of things that are happening around in the country, I decided to stay back. Let me see how long I pull on with this kind of situation.
So
Uh,
25% CAGR for the last 10 years, sir, that's phenomenal. Means
uh,
I don't know how you are able to, achieve it. Like it's
uh,
out of the world.
no, it's not. It's mainly because there are people who have done much better than us. I know very well, but their leveraging has been about 3 times. We are unable to do that because we do. The first rule that we have got in our group is that we should sleep well. None of us should lose sleep over overnight positions and all that. Almost for the last about 10 what 10, about 10 12 years, we have been doing this for about 12 years. So you can see that I have even I'm very thing about it. We have been doing reasonably well. That's what I would say. Compare with Jim Simmons, I think I am nowhere. And compare with a couple of people on the saying whom I know. It's not that you are seeing a screenshot and taking a decision, or you are just doing an Excel sheet projection and all, and thereby making a claim. No, I'm not like that. I've seen certain people who have done much better. I think they have done exceedingly well, and they have done. But I'm unable to digest their kind of their style of trading or their kind of leveraging. So I'm happy with this.
Right, sir. But there is no competition, right? So we are not competing between ourselves or between others. It's more about what we are comfortable with, as you said, how we are able, means if we are able to sleep, have a good night's sleep. So considering your leverage and considering that you have made 25% CAGR, that is something, means you have outperformed the index. That is what matters, right?
Yeah, that is the easiest thing. Beating index is not a big index is there is no leverage in index. No, index has to do the capitalization fully on its own. But I have a leveraging capacity.
Sir,
So,
I can guarantee you, not more than 5% people in this space is have been able to beat the index in whatever time period they have been trading.
well,
I can assure you.
that, well, uh, I see, sincerely I feel that it's a difficult world out there now with all the technology, and almost everybody is technically qualified and technology driven. It's difficult, but I think the charm is only in patience, and the charm is only in knowing that, yeah, if it is that's what I always tell on my thing. See, if it is winter, how long is it going to come to become the spring? The spring is round the corner. So don't lose patience, don't lose your thing on the basis of a month or two's drawdowns, so long as the drawdowns are within the parameters that you have set already, fine, that's good enough. I think there's nothing more that you can look for. I think that's how the market behaves. Market is a great leveler. Market see, none of us are, even when somebody says that, in fact, we were offered about doubling of our capital within a year by a well known options trader. In fact, we tried out for about almost about 9 months. One day, I think we called it a day, telling that, look here, you are doing good, you are doing exceedingly well, you have done an excellent job, but we are unable to digest this. So kindly return our money, and we will be happy with that. So it's a thing that we have to draw the line. We somewhere down the line, we have to think that this is what we should be ready to take as a pressure in our mind, and there is no need for us to prove to the world anything. As you rightly said, we are not in competition for any game or anything like that. I have never attempted at zero das challenge rounds or anything like that, because I am not capable. So I don't like to compete in a play in a particular area where I am sure that my mind will not stay, and my time may not also permit. In fact, a couple of companies where I am a director, they used to ask me, "Why don't you don't have anything to do with the market? Basically, why are you agreeing for a meeting before 3:30?" I said, if I am to look for that, I think there I have lost my whole edge. I don't want to look at the market. Even if I don't look at the market, I should be calm and comfortable. So that's how I am made of. So that's how it is. So it had been nice. It had been nice journey. I have no regrets of becoming a trader in the market. I have no regrets of being a stock trader. No problems of anyone looking up to me. Are you into stock? Is it not gambling? I calmly explained to them it's not gambling. That's all. Uh, I think the worst criticism had come from my mother.
So
She had.
how do you explain to people, and how do you get them to believe that it's not gambling? Because that may be a problem that we all face, and we have difficult explaining people that what we are doing and how it's not gambling, and we are not gonna go bankrupt someday.
No, one can only explain to them that this is not gambling, but I don't think many agree. I don't think the world is ready to take this. I don't think, yeah, even my mother is not ready to take. My wife is comfortable with that, but my mother is not comfortable. My mother says, with all your CA and your rank and all that, you are having achieved so much of thing in CA. Why do you go and do this trading? That had been there for the first 5-10 years. Thereafter, she has also stopped. She also now agrees that okay, her son is not going to.
No point telling her, telling him is not gonna listen.
Exactly, but my wife knows, because basically she's probably out in the open for being told about so many things. But yeah, it is difficult. Basically, it's difficult for you in the early days. I mean, today I have got a lot of gray hair, so people will accept a lot of things that I say. But early days, people will be finding it difficult to accept that you are a stock trader. I mean, that's not a very respectable thing for many people. So but then you have to accept, these are all things that we need to face in life and proceed. But it had been a nice journey over the last about 30 years, and while it lasted, it was very good. And I think even now I don't find the market to be any less exciting. Market is quite good. The only thing is that I don't take the excitement to my heart or mind. I just look at it, and I'm amused by so many people who predict and fail miserably. I mean, I have been watching people who have been predicting down circuits and upper circuits, and I think market doesn't oblige so easily. That much I can tell you. Market doesn't oblige anybody, so it's a nice experience. Yeah.
Yeah, so let's try to drill down and understand that how we can also kind of generate some alpha from the markets. So hypothetically, I gave you 1 crore on January 1st. Okay,
Yeah.
you said you do asset allocation or how you want to invest that money, at the very beginning of the year. So
Are you sure? Are you sure that you are having a risk capital of 1 crore?
yes, I have a risk capital of 1 crore, and I
You
give it to you with a assumption that it is your responsibility. You do whatever you want to do. I am okay with that.
correct. uh, Very nice. So the best thing for me to do is to put that money into my trading engine and generate a sensible return. After all, not more than about 25% will go into the margin. Balance amount will remain in either a fixed deposit or with the bond funds, which of course, last about 2 3 months had been disastrous for bond funds. So otherwise, it's all right. I mean, if you go for a fixed income return and you allow the money to be there, being a cushion, the system will generate easily. I mean, at least for me, it has been generating easily about 25 to 30%. See, when I am telling you that we have returned 23 to 26% to our investors, that meaning investors, meaning our own family members. Beyond that, there is an expenditure that is involved, an office running expenditure. The gross return from the market would have been anywhere between 28 to 32%. I am calculating about 4 to 6% that is to go for expenditure. So
So
once that,
what are you trading, sir? What are you trading to generate that 30% return? Is it all trend following? Is it all index or stock futures, or what kind of strategies or instruments, or means what are
about
you trading basically?
about
What does your book contains?
about 15 stocks we have selected, having the liquidity, having the volumes, having the kind of spreads that we expect the market to offer. About 15 stocks we trade. We trade today about 14 different systems on different time frames, right from 3 minutes or 15 minutes or 30 minutes or 1 hour or 4 hours. So that is number one. Then almost an equal amount that we invest into index trading, Nifty, only Nifty, no bank Nifty, only in Nifty. So we trade in Nifty. Uh, we trade in several kinds of system. We trade about 5 systems on Nifty, and then we have options on mainly will be on straddles. I think right from at the money to 2 to 3 sing strikes above on the hundreds, not fifties, hundreds, and then this side and that side, and we are clear to go. So there is no problem at all. There is no confusion. There is no dithering, no immediate decisions to be made. All are fixed at least a month ahead. Whenever we start our trading, at least a month ahead, all of us know what exactly we are doing. So it will be an easy thing for us to do. We don't execute anything. After all a system on Excel, wherein the bulk orders are passed through, or done. I am being monitored by one person in the office. The dealers execute the orders and tell us. Execution means what? Execution is only just pressing the enter button. So as and when the system generates a buy or a sell, they do the thing. And
So
these are
have you back tested all these strategies? Like, how do you get the confidence to deploy your capital?
2001 to 2022. Every one of the systems have been backtested. 2001 to 2022. We are talking about 2021 years.
Okay, and how are you sure that your backtest is correct and you don't have any bad data, or
That's
Uh-huh.
every week we have a complete thing. Every day there will be a report from the dealers on their thing, whatever signals that have been generated, and where exactly the trade has been taken, whether the trade has generated a positive variance or a negative variance, and then what is the effect of that ultimately. So this is collected. We have a very clear system, very clear standards set. We have a what is the standard variance that we expect from the market, that is already preset, and we compare whether in this month we have gone positive against the standard set or we are on the negative side. So this is being reviewed. If 3 consecutive months if we fail against our own set standards, we drop the system. So then we have to find a new system. So this is something that has been going on for the last 20 years. I mean, back testing has been going on for 20 years. The trading that we are doing it about right from 2008 9, and surely from 2011-12 we are continuously doing. Last 10 years we have very clear records, very clear trade journal, very clear test reports, very clear evaluations that are done, and every employee who does that, he has to give out a report at the end of the day, that he has to tell the variance is because the market jumped, or the order did not get executed, or it was his failure to identify something. So these are all things which do, but failure to identify has gone off in the last about 2 3 years, where we have moved into an Excel driven thing. Otherwise the other two will remain. The market jumping, the trade was not absorbed, and all that, those things do take place, and then those slippages will have the slippage reports will indicate the kind of problem that we face. But by and large, let me tell you, we have not had any requirement to revise upwards the standard variance that we have to set. We have only revised it downwards. So basically it had been a nice journey, and the office takes care of it. We have not employed anybody who is above 12th pass for executing our requirements, and I think they had been doing a very diligent job and a very exceedingly efficient job for us.
So how do you find strategies? Like how do you go about making your strategies? Do you look at the charts intraday and try to form some kind of patterns, or do you look for ready-made strategies that are out there? Like
we
how do
talk
you
we,
find?
we
Huh?
talk to people, like we talk to people with so many other people we talk to. They say that it is like this. Then once they say, supposing you say that a 10 period
Moving average.
moving average, uh, whatever moving kind of exponential or simple moving average, whatever it is, 10 period over 20 period, that was our starting first thing, was 10 period over 20 period. Slowly we moved over to several other combinations, and on a larger base, including 3 day moving average by 5 day moving average for Bank Nifty, we have traded a lot of such things. It's only on the end of the day trade to be taken, 3 DMA over 5 DMA. So it has given, but then it all depends on whether you would like to be in suspense for so many number of days. It's all there. I mean, slowly we moved into the options. Similarly, on our options trading, we did a lot of uh, our own this thing, concoctions that we made. Whatever is giving profits over about 25-30% over 1 year period, they stay with us, or else we will cut it out and then move over to another system.
Okay, okay. I remember, sir, you sharing a strategy on Twitter that was a trend following strategy, like with a holding period of. It was a good holding period. I forgot, like 10-15 days, I guess. It was a something kind of a super trend, but not exactly super trend. It was
Oh,
something.
I see.
Yes.
These are things which we constantly we experiment. See, this is a. I think all of you, if you had followed a Trade Point, I think it was defined. The Trade Points. It has given out a thing on Renko. there is a trade point thing that gives you an indicator called a must indicator, which is a combination indicator of super trend with some masala.
Right, right.
So yeah, so I have tried it out. This worked well for options thing, but see, these are all good for people like me who do occasionally a trade, but not in the kind of thing in our office. The systems will be more robust, clearer, because there are a lot of our systems when we in the sitting outside the terminal, when we develop systems, we develop with a lot of ifs and buts and with lot of confusions and lot of doubts. A lot of things need clarity and all that. Such systems cannot be handed down to an employee. In all our cases, an employee handles the terminal. I can't ask the employee, why did you not decide like this? No, an employee is not supposed to decide. In trading, in a system trading, the employee is not supposed to decide. He is to execute. And execution does not require a decision making. A decision making means that you have to say whether you have to take a trade or not. No, that kind of a very strange situation an employee, if he is in, he will most probably fail. And if it is an employee who is failing, it is much easier for the man who puts the money to criticize him. So there is no point in criticizing an employee when your money is gone out. So the point that we have to take a decision is, when you hand down a system to the employee, it is like a hot stove. You do it, it gets executed or it does not get executed, and what is the remedy for non-execution? That's all. The execution is the only thing that the employee is supposed to do. So that is the kind of system that we give here. A lot of ifs and buts, if it is there in a system, I think the employee gets confused and he doesn't have clarity, and he will only fail. So that's the kind of thing. So what I tell on the thing, it doesn't mean that I am following that on a continuous basis. Let me be very plain. Uh, uh, what I put it out on the thing, that is, these are not systems that our office trades. Our office trades those which are having a back test for 20 years. Unless and until they have the system back tested, they will not put it out as a accepted system for putting out for trades. So it's a very simple process. Unless a system gets back tested for so many years, people have been asking us, why do you do back test? What is the assurance that the back test happens in future? Well, if something has happened on an average over the last 20 years, we presume that the same average will continue over the next 5 years. So that's how we proceed, and that's how we are tuned in our mind.
Okay, okay, point taken. So, are these SAR models kind of thing, or is it, like buy and exit from the market and then re-enter after some condition fulfills, or you
See,
are in the markets all the time?
see, several systems we are always in the market, but there are a new kind of systems that we have done for what you call purely long only systems that we have got now. These are the recent additions to our thing. We do have long only systems in which we think that the market, because all the place around you, you hear that the market is going to go down to what, 14,000, 12,000, 8,000, 7,500, 5,000, 2,000, whatever. So we don't know. I mean, I may counter somebody on the basis of my knowledge in economics, but while you are in market, anything is possible. Today, I think all of you would have read out the JP Morgan prediction of $380 per barrel for
Right,
oil,
crude oil. Yes.
crude oil. Uh, See, theoretically, it is impossible. We're looking from your present situation, you think that it is impossible. But who could have expected a -$20 2 years prior to 2 years? You just tell me. Who could have thought about a negative quote for a crude oil?
Right.
So
Even the brokers didn't predict that or think about it.
exactly, Interactive actually paid out a huge
Yes.
amount to their
Clients.
trader. Yeah. So what I'm telling you people is that accept. if somebody says $380, you think that, oh, it is highly possible. Why not? See, supposing Saudi Arabia is bombed, who knows? Supposing Iran and Saudi Arabia gets into a war, we don't know what is going to happen. I mean, these are things which we will not be able to predict. So accept whatever people say. Okay, it is highly probable. If it is so, what is it that we are going to do? That is what we should look at. So a trader has got a lot of such kinds of situations and decisions that he has to make, and we have no business to predict. That's what I tell people. We have no business to predict. We go with market. We are followers. We have no business to predict. This is my view, and there are a lot of people, particularly on Elliott wave, people are there who do engage or indulge in prediction. You call it indulge when you differ with them, but you call it that engage when you say that, okay, maybe they have got an edge. I don't have the edge. Let me be honest. I have I have tried. Let me be honest. I have tried at least about 20 to 25 people around this country. They may be in the north, northeast, northwest, west, wherever you can find. We have tried. All of them, whoever had tried to predict, have failed. Whoever have tried to predict failed. So I I simply kind of feel that it is impossible to predict, and almost I will accept the market as it gives, and I will just follow the market. That's my basic decision. Yeah. So
Okay.
let's move to the main topic that we had originally agreed to
Yes,
put
yes,
it
yes.
out
Yes.
to make things interesting for pure listeners. I think we will
Right.
go to that. Yeah. See,
Right.
these are things which happened right from 1988 89. I had been following the market. 1991 I had been in Coimbatore Stock Exchange, and in Coimbatore Stock Exchange, when I think the last set of serious trades that I did in Coimbatore Stock Exchange, besides the Reliance story which you all might have heard, the last set of serious trade was in Timken India. That was Tata Timken those days. It had come out with a public issue at that time. We were in a huge way. We were handling somewhere close to about 350 to 400,000 shares. We had handled the Tata Timken in the gray market area. So those are all days which all those things had been systematically been followed. So we will be doing gray market trades, settle things outside the exchange, settle things one on one with the concerned person, and then we will it was all on trust basis. It went through, and we used to do that in 1991. I mean, now after my coming over to Chennai, the only kind of such similar decisions have been made were on SBI Magnum in 1992, which I think many people failed to honor. But in 1991, when I did Timken, the last known quote, the rate at which I had sold in the gray market was about 400 rupees. That was in 1991. But when it came out to the after the IPO, when it got listed in Bombay, we never saw all those rates. And then it went down to as low as about 10 rupees. In my opinion, I think it went to 10 rupees or 13 rupees or whatever it is. So we all found that these are all things. These are good share. No doubt about that. So sometime in the year 98 to 2000, I had been reading the things called. I think all of you are aware of what is called Elliott wave, I suppose, right? So Elliott wave is something which has been popularized by Robert Prechter. Uh, in 98 to 2000, I had been just hearing them. In 2001, I was on my way to Tokyo. So uh, in the Hong Kong airport, I found this Practice book called At the Crest of Tidal Wave. So from Hong Kong to Tokyo, I read the book fully. Now, some of the things that the Proctor has been telling have been very attractive. He says that every stock has got, I mean, every dog has its day, like every stock will have its day. So you don't question them whether it is on the fundamentals or on the operators thing or it is being manipulated. Don't question all these things. See the price, you trade your price. So Procter has been telling that a stock has a this thing of habit of following about 90 to 98% from its peak. That's what he told. I mean, that's the way he predicted 100 Dow 100, like those days. It was all a funny thing, but we all presumed that he was a knowledgeable person and he was talking something sensible. But later on, we found that he was a bit over enthusiastic in his prediction. But then I learned from that that every stock will go through such a similar process. Sooner or later, stocks will go through that kind of from then on, I had started looking at the market and I had started taking shares. Several stocks I have taken, not one, two, three, four. I think at least about 50 to 60 stocks I would have accumulated in this kind of a thing. The first thing that I see is if something has stayed at about 200, 300 rupees levels, and that stock has fallen to about 10 rupees, 5 rupees, like that, those levels, whether it has fallen. So, meaning that it falls by about 98% or 99%, like that. And then see whether the company after that, when it stays at that 2 rupees, 3 rupees, whether the company still is alive. This is what I see. The company should be alive. Uh, Once the company is alive, now I'm not talking about the promoters being alive. I'm not talking about the management being alive. I'm talking about the company being alive. So once the company is alive, the company reattempts to reach the same kind of heights that it had seen previously. So this is the kind of theory by which we all were looking at Himachal Futuristic at 2,500, 2,500 I suppose. Yeah, 2,500 rupees, Global Tele at 3,500 rupees, Leading Edge Systems at 3,500 rupees. Several such shares, Square D software, DSQ software, that quoted at about 3,000 plus. All these technology stocks which reached great heights, it went into a total. So so what is the way in which you presume that it can go up? So at that time we were in our office, we had a person who was an MSc mathematics. He was working along with us. This person was telling, uh, he was advising us, the we are talking about between 98 and 2000. He was telling us stock Tata Motor and Tata Steel. That those are the two stocks that he told. He says that these stocks will fall to about 35, 40 rupees levels for whatever reason it may fall. Once you do that, at that time you pick it up. I still remember he was telling about Tata Motor. This will go to 300, 400 rupees level from this 30, 40 rupees level. And then again it will fall once more to that level. You pick it up, it will be a great buy. We are talking about 25 years back. Somebody was talking about this 20, 24 years back. I had been watching this talk and I had see it's so easy to be happy about seeing a stock at that 300 rupees and then seeing that same stock at 35 rupees and 40 rupees. I think we saw Tata Steel similarly. Uh, it's very difficult to take a decision to buy at 36 rupees. Let me be honest with you. Very, very difficult. Tata Steel is not a penny stock, but this is a rule that he told, that a stock can fall like this for 90% to 98%. So he gave me a rule. If a stock falls by 80% to 85% only, it's a super bullish stock, and then it can go on to become one of the best stocks in our portfolio. If a stock falls by 90%, it's really worthwhile, and it will certainly you will be able to get back that same thing. If a stock falls by more than 95%, it's a weak stock, but still it has the capacity to go up. The stock falls by about 98%, it is junk. But then what's the problem? If it is 2 rupees, why not put your money into that? And 2 rupees or 5 rupees, why not put your money? Put limited money and start accumulating that at that level, and then allow the market to take a decision, whatever may be, that there will be some fellow who will come and resurrect that share, and you will be able to get back all the money that you have invested. This is an advice. I think I cannot remember, that person died. He was also a follower of Elite Wave. He on those days we didn't have this kind of charting that is possible today. He used to draw charts with graph sheets, and he used to explain to us every day about how to think. Though we had Metastock, he used to plot the stocks in the graph sheet, and he used to project it to us. So he was the main person who taught us about this penny stock, and he always will tell us that pick up these stocks. Probably you will be able to make the the point is this. The point is the major thing that happens here is money management. You are not supposed to blindly buy all the shares for all the money that you have got in bank to these penny stock. Allocate money, probably about 10% or 15% of your total listing, which you can afford, or a part of your earnings which you can afford to lose. You put it in several stocks. Don't put it in one stock and try to think that this stock will give us all the money. Spread it over a slew of stock or a portfolio of such penny stock. Keep them separate. Don't unnecessarily follow them for 100% return, because from 2 rupees, if it goes to 4 rupees, it is 100%. No, no, it doesn't give you any big money. So because you are going to invest only 5,000, 10,000, 25,000, it's not going to give you big money. So basically what he says is, don't look at them. If it is going to be 5,000 rupees that you have invested in a 2 rupee stock, that itself is 2,500 numbers. Allow it to be there. Let's presume that 5,000 is written off. We will see it only if it comes to a sensible level of 100 rupees. At that time, we will look at it. Until then, we need not. So if you so happen to in between watch these stocks, and it is trading at 40 rupees, 50 rupees, probably you may like to take back for investing in more such a penny stock elsewhere for that period. So because these things take a lot of time, take 10 years, 15 years for it to mature. That is how I bought that stock called, presently it is called BCG or Brightcom Group. Originally, I think it was called Lycos International, which became Vibrant Technologies. Thereafter, it changed its name to Brightcom. My average purchase rate would have been around 6 rupees or 6.5 rupees for this share. I invest somewhere about 5,000 shares in this. So it was a sensible thing. So okay, I said that it's all right. Let me be sing. Let me write it out. Uh, Fortunately, it had some backing from some great names in the market. So if you see the charts of these shares, they give you a lot of time. If you see that the bottom rounding that happens, it happens for quite a period. Thereafter, once it crosses the high, it has its own momentum. I think at that level you see the volumes also picking up tremendously. Everything is given. I mean, once you are a follower of chart, you know very well that everything is given advance notice of you. It is not as if that you don't have notice. You do know what exactly. It's a point where you may be afraid, but that's part of the market. Market is always a mysterious game. So you may have to accept this situation. The chart that I would like to tell you is about presently, which I am in, is CCCL. CCCL is Consolidated Construction Consortium. It has a lot of history. I know the promoters. I know their name. I know their personal listing. But point that I just want to tell you is, these are stocks in which the companies have withstood for quite some time the low prices of the stock. If you see the consolidated CCCL stock, you will see that the stock had been lingering at a lower price for almost about what, in the 2 rupees,
Decade,
3 rupees.
yeah, for almost a
Sorry,
decade now.
for most about a decade long, a bad thing that you will be seeing. That's what you will be seeing. The whole thing is that right from 2012 to 2022, it has not crossed 10 rupees, right? So now the present thing, the bottom, if it is taking this kind of thing, the first break above 5 rupees or 10 rupees will give you extraordinarily good return. At the time, you should not be afraid to hold. You are not supposed to. Once you buy them, you should not be in a hurry. I mean, in fact, though everybody, I mean, I think if I remember right, Anand Luhar is there, no? uh, he's a guy, he's a CA, I suppose. He was the one who was telling me about this stock that should go to zero, BCG, where I mean Brightcom Group. I don't believe so. See, all of you think that it is the company's fundamentals make for the prices. I am a believer. It is the holder's capacity which makes for the prices. The fundamentals, okay, the fundamentals are needed. It is not that fundamentals are totally zero, but the owner's capacity to hold a share, the owner's strength, it translates itself into the company's prices in the market. What the company is worth is a different thing from what the company is valued in market. Unless and until you are able to understand the difference between a market value and a valuation as per you, the worth of the company, unless and until you know the difference, it is very difficult to accept and enter or exit a share. That's the reason why I have come to the conclusion. I am a CA, and I know very well what is the way in which you can value a share. You use all kinds of jargons and all that, and then finally say that it. According to me, a share is worth only the amount that it returns to the investors, whether the investor is an outside investor or the owners, the promoters themselves. That is the value that it can think. All other things are perception. All other matters are pure perception. In your perception, Zomato is good, bad, ugly. This Zomato is good, bad, ugly. So when you think that it is good, you give it 150 rupees. When you think it is ugly, you think it is only 30 rupees. So that's all that is thing. Otherwise, what I see is that these penny stocks are the things. A lot of present day, whatever has happened in 2021, 22, a lot of these stocks may become penny stocks in the days to come. I am very sure about that. A lot of stocks can come to. Be ready. Be ready with your allocation of funds. Be ready with them, and then start looking at how to invest in these and make a benefit. I may be around. I may not be around in the market. My advice to you people is that be very think about holding on. How many of you are invested into HFCL? Just imagine. This is another stock which I had picked up. I had my partner had made a very big mistake in this stock in year 2000, in March 2000. So from then on, I had been watching this stock. I had been with this stock. This was called Himachal Futuristic Company. Communication or Futuristic Communications Limited or something like that. So this HFCL is something that I had been associated with right from the 1990s. From the good old days, it was as Himachal Futuristic. I think this was being advised by Capital Mind and all that. I don't know whether you people are even aware of the not Capital Mind. What is that? Capital Market. This is a magazine published out of Bombay. So these guys used to advise on this stock. I had bought this stock, and then I sold this stock in the bull market. I had sold this stock. Again, it came into thing, and again the in 2000, this was pumped up stock by Ketan Parekh. Uh, I mean, in this stock, I think I am fully aware of who pumped it up, for what benefit. All those things I am aware of. We lost money in that. So after that, I went into that, and then my same theory that I had seen, once it came to about 10 rupees and below 10 rupees, I had invested into this stock, and I'm very comfortably, I can tell you, right from 2011, 12, 13, 14, this stock was not quoting anything beyond 20 rupees. At least about 4 to 5 times I would have traded, and I would have made my cost to almost zero. Now I still hold on to this quite considerable amount of shares. I hold on. I'm comfortable with holding on to these shares. Why I'm telling is, one day, I am very sure one day this stock will cross 210 rupees. One day. Which day, I don't know. What is the news that will come? We don't know. But I am hoping that this is expected to happen. Same thing I am looking at this CCCL. Uh, See, yeah, one bad thing that is about CCCL is it is in a very bad market construction area. But I feel that these kinds of shares which will do well in some thing. We are not looking about 2000 rupees that it should go. We are looking at about 15 rupees it should go, 25 rupees it should go, 100 rupees it should go. So for that it should be worthwhile. This is not an investment advice. This is not a case wherein I am trying to help you to pick a stock for a long term holding in your portfolio. No, nothing of that sort. These are penny stocks. We all recognize them as penny stocks. We think that, say, today it is being traded about 2 lakhs to 3 lakh shares a day. So the active interest is there in this stock. So we have to necessarily be following, sensing something that is happening in the company. Maybe it happens, maybe it does not happen, but eventually we feel that it should give a decent return. Hold on. But take only that number of shares which you can write off. Always think that these shares should be bought with a mind that you are writing them off. So, what amount you are comfortable writing off? If it is 1,000 rupees, only 1,000 rupees. If it is 5,000 rupees, 5,000 rupees. Nothing beyond that, you should be ready to put money into this stock. That kind of thing will put you into a lot of comfort, and I am very sure that you will all appreciate. The same situation happened even in the case of FTIL, Financial Technologies, which is now called 63 Moon Technology. Uh, I think I bought it around 5 rupees or 6 rupees. Company suddenly they said that it is closed to for reconstruction and uh, some amalgamation and merger, something is going to be taking place. And then they went into the High Court of Madras, where they ordered a reduction of capital. I got the shares, and I think the first set of selling was done at about 60 rupees, second set of selling was done at about 130 rupees, third set was done about 400 rupees. So what I suggest is that in many of these shares there are high probabilities that you will be able to get an exit. But what happens is, a substantial number, if you take 100 shares, I mean 100 different companies, 50 may fail, 30 may underperform, 10 may overperform, but the balance 10 will outstrip the entire 100 thing that you have got and will do exceedingly well. That is exactly what the way in which, and if your time is good, maybe more than 10 also will do well. That is the way in which I am approaching this. Yes, now I will take questions from you people.
Right, right. Makes sense. Makes sense. Thanks, sir, for elaborating your point, and it really makes sense. It's all about money management, right? So it's not
Absolutely.
about stock selection. It's about money management. How
There
you're
is no there is no
allocating your
stock
capital.
there is no stock selection. The only thing that you should not get into a problem is a stock which is trading 15 shares and 20 shares you should not touch. What you should look at is a stock which trades at about 1 lakh shares or 2 lakh shares continuously with a 5 rupee 5 paise difference. This is what you should look at. That's all that should be done.
Right, right. So let's open the space for questions now. So you all can click on the mic button and request for to be a speaker, and I'll add you as a speaker, and you can ask your questions. Okay, so we got Mukabai Ivan. I'm not sure if I pronounced it right. So
No,
Ivan, if you
that's
can, yeah.
fine. Yes, thank you very much, yes, Mr. Suriram. I have two questions about the stock trading. The first question, I wanted to understand whether what is the effect of COVID-19. What is its impact on the global economy? How did it affect the performance of stocks? Did it have any effect? Because you have really wide knowledge in this area and you've seen the industry develop for years. So I wanted to know how did you see that transition during COVID and after? Did it affect? And then number two, does money laundering, if someone is laundering money and they want to invest in the stock industry, is it a bad thing when we are dealing with management of funds? Could it be something where we refuse to allow someone to invest in the stock business because they are getting dirty cash? I wanted your guidance on that. Thank you.
Yeah. Second thing first, money laundering in any manner is injurious to the nation's wealth. So you should avoid money laundering. Don't ever do that. But with all the pontifications and moral policing, still these things do take place. But that's not to be seen. Regarding this COVID, I think now the matter is very clearly set. During the entire COVID, I think the market was pushed up because of liquidity. That's what people say. So with liquidity, stock market flourished, and therefore we are all in this kind of happy situation in which from seeing the index from the lows to almost 3x 4x levels in several areas, at least about 2.5 3x in India. So that's where we are. Therefore COVID had been good for the market in the sense that it brought in huge numbers of new investors into the market, and there were huge amount of savings with the people. Somewhere I read recently, COVID put the American savings to 20%, which is a phenomenal figure, and now it is back to about 3% or 4%, which is what the America is feeling all about. So COVID had been good for the stock market. Next. Hello.
Ivan, your mic is muted.
Hello.
Yes, yes, you can speak here.
Yeah, yeah. Then I wanted also to know, because you gave an example of the market trends, that it may change from 90%, 95%, 98%. At what stage can someone know that really this stroke is not really good for investment at all? Would it be based on maybe if it has fallen very low? And when do you know that there are no even chances of this stroke ever improving and it's not worth investing in money? Thank you.
98% will be very ideal. If your stock has fallen by 98%, it will be very ideal. But then you have to be absolutely be sure that these stocks will have to be written off, and most probably you may have to lose the entire capital. But a lot of stocks escape that write-off stage, and they come back to life. So that's how it is. Next one.
Yeah, thanks. So next question is from Madhavi. Yeah, you can ask your question now.
Yeah, hi, sir.
Hi.
I had only a couple of questions. Like this filtering out, okay, that has to be done as an event based, like we had on March 2020, or the filtering frequency can be like weekly or monthly.
Oh, the best portion for you is to do will be done by the stock exchanges themselves. You will be seeing in Bombay Stock Exchange, preferably in Bombay Stock Exchange, because they have so many shares like this. You will be seeing the all-time high, and then you will be seeing the fresh low, 52-week low, and then they come to an all-time low. So at the time of all-time high and all-time low, if the difference is 98%, you can look at them and then start thinking about it. I generally do right from 80% fall. I generally take it up something like your India Bull Housing Finance, though Anand Luhar has got his own viewpoint on that. I respect the view. I respect the fundamental view, but then basically these are shares which interest me, because these are with the masses, these are with an operator, these are with some interested party. Therefore, they will be giving me money. So what I am suggesting is from the Bombay Stock Exchange all-time high, all-time low figures, you see whether something has fallen 80% and above. Classify them, keep a list, tick out whether you can invest 5,000, 10,000 into that. Choose your own thing. There is no, is there, if you're asking me, is there any scientific way you can do? Yeah, you can have a scientific view. Number one is that whether they continue to do at least they are doing a sales turnover which is equivalent to that kind of thing. But these are, in my opinion, these are immaterial. Another stock that I think I can tell you is Lafance Petro. This is a share which the company had sold it to, I think, I think Huntsman International, their entire business. The company was quoting at 6 rupees, 7 rupees level. I did invest. Seeing the balance sheet, I invested at 6 rupees. So now it is about 38 rupees, 40 rupees. I have not sold. I am simply watching the share. I will watch with interest. So there are methods. You simple method is go to Bombay Stock Exchange 52-week high low, the regular daily publishing figure. Wherever you see from all time high a share has hit about 80%, start looking at those things, note down, and then you follow those shares. I think that will be the best way for you to follow.
Okay. Thanks for that input, sir. And how about you do pyramiding in these
No, no,
stocks
no, no,
as well?
no,
No.
no, 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 no pyramiding, no nothing of that sort.
Okay.
Just
So
a single time
in and out.
investment.
That's it.
Yeah.
Okay. Okay. And so the exit strategy is also on a similar lines, like when you have I mean, is there any peculiar
Chart,
points which we need to
charts
check
will
out?
help you. Charts will help you.
Yeah.
Normally, supposing you now see consolidated construction, you are seeing now at about 22 rupees and 2 rupees 50 paise like that. This share will have constantly, it will have an excellent resistance at 10 rupees. So you buy now, you can exit at 10 rupees. That is one method. Or you can wait and then buy after 10 rupees. So thereafter, if you see the next level at which the stock has a great amount of resistance will be somewhere around about 60 rupees to 80 rupees levels. It will have a resistance. At that time, you can exit. That's another point. Otherwise, you can wait for a fresh all-time high.
Okay. Thank you, sir.
Thank you.
I'm done, Ashu.
Yeah, thanks. So next question is from Kirit Manal sir. Kirit sir, yeah, you can go ahead.
Yeah. It was great listening to you, Mr. Sriram. I
Thank
have
you.
one question.
Yeah.
You mentioned that at any given point of time, couple of your strategies are at play. Some with a 3 minute
Oh,
candle, 5 minute, one
you're,
hour,
ta-
right?
you're talking about my system trading,
Yeah, about your system trading.
right?
Okay. So you said when it came to allocation, you have many strategies which are at play at any given point of time. If you
Mm.
can just share, if possible, that if all the strategies are at play, what is the total risk of your capital when all the strategies are deployed?
See, let me be honest. The total,
Please.
whenever we are trading,
Uh,
we presume that the entire strategies will be at play. That's how we presume, and
okay.
and our capital risk will be about 15% of our assets under management.
So let's say, yeah,
Yeah.
sorry, sir. Go on, sir. Go on,
Yeah.
sorry.
So supposing we have invested about 25 crores. So
Hmm.
our total risk will be somewhere close to about 3.5 crores will be the maximum risk that we will be taking. If at 3.5 crores, we will say nothing has worked, we close down and we walk off. So far, we have not seen anything even beyond 1 crore being at risk or as a drawdown. We have not seen from our experience.
So to cut it short, is basically if all the strategies are at play,
Hmm.
and at any given point of time, the higher side risk could be 8 to 10% of the capital,
Of
of
the
the total capital or total capital deployed.
of the total capital of the entire assets under management. See, basically,
Okay.
because we are having an X amount of capital only,
Uh,
we are
uh,
we are indulging in a total risk exposure of so much. So
okay.
everything is related to our capital. So in capital, if I lose 15%, I am out of this game totally. That's how
True,
we have decided in our mind. Okay,
true. Thank you so much, Mr. Sriram.
thank you.
Okay. So the next question is from Anish. Anish, you can go ahead.
Hi, Sriram sir, how are you?
Great, great, Anish, great.
Sir, so my question is more on your economist hat. If you wear your economist hat now, I know because I've been connected to you on Twitter for a very long time, so I know that you are one of the few people who you don't like predictions, so let me say you anticipated demonetization. So I know that your
No,
economics is as strong.
that was plainly probably a statement based on figures that I found that a bit alarming figures that I found on the thing. So I expected that to happen. It was mostly anticipating probably Modi. I was anticipating Modi to respond like that, and therefore I did that. Nothing else.
Yeah, but people like us, we heard the name demonetization for the first time when it happened. So,
Oh, okay. So,
so no, we had
yeah.
heard in theory only before that. So, I have a question more relating to today's macroeconomic
Yeah.
situation. What is your view on that? I think, if I'm not wrong, you think that we'll soon be in deflation.
See, basically, this is what I'm hearing. I think this is something that will interest you. I hope it will interest you. In
Definitely.
fact, the last meeting itself, I should have talked in the last meeting, but I could not because I was suffering from a sore throat and all that. When you had hosted a space, I think I should have talked. I did not talk because of that. Okay. No, I see. Basically, I'm not a person who is so alarmed about this inflation, but it also catches me up somewhere. I think it is something like COVID. I think I have also traveled around the world. I have met several people. All of them talk about inflation, and I think I did write to you about that Balaji Vaidyanath or somebody who had specifically was talking about one thing. See, this must be this inflation is not because the world is not able to produce enough to give the supply, but it is because the world is constrained by a war as well as a finicky China who is not ready to open up its economy, and therefore there is a shortage of foods or shortage of goods, and therefore there is an inflation. That's what he was telling. It was a supply side restriction that had increased this kind of inflation. That is what he was trying to tell. I mean, the world was never short of supply, but the war in Ukraine and the problem disruptions in China have increased this kind of fears of supply side restrictions and supply side scarcity, which have led to this kind of inflation, is what he was trying to tell. Well, uh, inflation is not necessarily because of that. I feel that the inflation was anyhow in the offing because of the huge amount of money that was being printed or whatever it is. It is put in the hands of people in US. I think I just mentioned from 2%, 3% level of savings, they went up to 20%, and therefore they had to necessarily spend, and they are spending, and therefore the inflation has gone up. Now, what is it that is expected in future? Two things are expected according to me. The war will come to an end. The war is eventually in the next 2 to 3 months, either Ukraine being totally annihilated, or Russia has found it enough and then they are withdrawing. The war will end. And I think there are different voices that are talking in China. If you had noticed, I think I had been telling this on Twitter also. There are different voices that are speaking in China, in which they found that Xi is not competent enough to handle the economy like thing. And I think their premier is, I mean, the prime minister is coming out and talking a lot of things. So China again will come back to provide the supply, but it's a moot issue now whether China will be able to pump to the world the same kind of exports as they had been doing. What I had noticed and what I had heard is this: world does not want China again to start doing the same kind of nonsense as they did in the last 6 months to 9. World is the world powers are done with China for that kind of a thing. China will continue to exist. China will continue to produce, but the kind of influx China had, it may not be permitted or it may not be liked by many countries. And I think the China's supremacy or domination in the goods and these kinds of manufactured things will slowly go off. I think there will be a replacements all over the world. India may also find a place. India may not be the biggest, but India may also find a place. So in that situation, there will be a measured supply coming out in the world. But US Federal Reserve is not very happy about the inflation figures. So they are out to destroy demand. It is a demand destruction that is being attempted in US. So there may be for at least about 4 quarters to 6 quarters, I am expecting some kind of slowdown in the US to happen. You may have a 2 quarter recession, which will mean that they are officially into recession. Then there will be slow picking up, and I think over the next 6 quarters, I think we should be prepared for muted economic performance all over the world. That need not necessarily be affecting India, but it will be, India being a connected country, it will also affect India. So that is the base on which I am looking at 2024 is when the market will again pick up, is my view.
Sir, are we already in stagflation?
There is no stagflation. Who says that? Come on,
I
come
don't
on,
know. Means all,
come
all
on,
the
come on.
economists are talking about it.
I think people are totally totally deluded to think that there is a stagflation. Where is stagflation? Come on, let's be sensible about stagflation. What is stagflation? Let's be sensible about it. Come on.
Okay, cool.
So, so you think, sir, that there will be withdrawal of liquidity from markets? I mean, I was listening to your comment on U.S. households. So I believe pre-COVID they had about $1.5 trillion, and post-COVID, after helicopter money was checks were sent, they had about $3 to $4 trillion deposits in the bank.
Correct. 20% up.
Yes.
Yeah.
Yes. So now, you think there will be a squeeze out of the U.S.
There
consumer,
is.
and
There are a lot of employment losses that are taking place. I think they are going through a severe problem. I think a lot of startups are not getting funding rounds now. I feel the next 6 quarters are going to be somewhat painful, and I think we all need to adjust to that new normal.
so that you think will also have an impact on markets, because they will not be able to again now
Of course, yes.
ease for a while.
Of course, yes. Of course, yes.
Okay.
Of course, yes.
Thank you, sir. Thank you.
Thank
Chalo, hope that answers. The next question is from Suresh. Suresh, you can go ahead.
you. Suresh?
Yeah, I don't know. There's a Suresh.
Suresh is not there, I suppose. Suresh is, I'm seeing him, but he's not there. Yeah.
Okay, so the next question is from Yokesh. Yokesh, you can go ahead with your question.
Yeah, thank you, Ashutosh. So, Sriram sir, yeah, thank you for sharing your experience.
Yeah.
In relation to your the one of the investment strategy which you discussed, and
Correct.
I come from the regulatory background. I started my career in offline surveillance investigations way back in 99 2000, and the names you mentioned, obviously it reminds me of another company called Vatsa Music and Corporation. In those days, that company used to have market capitalization ahead of HL in those days also. You know where it is now. So I just
Yeah.
wanted to understand, sir, from you that obviously the way you described all of this definitely are all what in regulatory parlance we considered are bona fide trades. Have you ever faced any regulatory scrutiny, because this kind of investment strategy will obviously throw up alerts at a stock exchange level and at SEBI level, because these are typically, in that sense, illiquid stock or not so frequently traded stocks. In
Don't
that sense,
don't enter
so
them.
no, I understand that. Don't enter them. My
No, no.
question to you
When
is, sir,
something
is
when
yeah,
something is illiquid, or when something is a problem for saying entry and exit, my advice is don't enter. Don't consider those stocks. That's what I told you. Unless and until 2 to 3 lakhs of shares are being traded, and unless and until there is a bid ask or a spread which is about five paise or 10 paise, don't get into those stocks. It is
correct,
not worthwhile to put your money where you don't know where you will be exiting. So
correct.
the best thing for you is to be in a liquid stock wherein substantial trading is taking place, and be there. See, there are 6,000 stocks in Bombay Stock Exchange, of which you'll find these qualities to be at least in 200 shares, and you will not have capital to put into all those 200 shares. So let's be very plain. Let's not get into that. That's why I'm telling you, don't put more money. To put just about 5,000 rupees or 15,000 rupees or 25,000 rupees, not more than 25,000. That is my rule. I don't put into any stock more than 25,000 rupees in these kinds of penny stocks. I am very clear. So you are asking me about regulatory oversight on my trade. No, I don't trade. I don't buy 5 lakh shares or 10 lakh shares in these kinds of things. I will not. I am not
Understood.
here. I am not here for any such. I am only telling people you can make money even in these penny stocks, even when you are getting into. So where you are having a small amount of thing, 25,000, if it goes into 2.5 lakhs, is it not good enough? That is the kind of thing that I am telling people. I have got certain shares which I have invested at 25,000 rupees, which are now 25 lakhs of rupees. So that is the kind of thing that I am looking at, the where you can make money. Don't My point was, don't just dismiss stocks just because they are penny stocks. See, normally nobody advises you to have penny stocks in portfolio. They say avoid penny stocks, but then penny stocks give you the best of the returns. So allocate some of your money for penny stocks and don't over trade or don't over invest into any of these. Or don't become avaricious and greedy and try to put 25 lakhs of rupees into one penny stock. Don't do that. That's what I'm telling. Limit
No, no,
your
yeah,
yeah, limit
no, no.
your investment to 25,000 rupees, and then you can be happily carrying on your life. That's my point.
No, no, I agree with you. Thanks for clarifying it. That answers my question. Thank you so much.
Thank you.
Chalo, thank you. So we got next question from Krishna Kumar. Krishna, you can go ahead with your question.
KK. KK.
Hello, sir. Hello, sir.
Okay, good.
Nice to hear you after a long while.
Yeah, I'm also here after about 2 years or so.
Yeah, sir. A couple of questions.
True.
Do you think that market is digesting developments at a much rapid pace and discounting it at a much rapid pace than what it used to do maybe a decade or two ago? Especially if you look at the speed at which the market falls and rebounds. Do you think that kind of a phenomenon is happening, and is it going to be a norm? Because
Yeah.
earlier you would see the typical correction, consolidation, reversal, and all that playing out. But these days, even if you see that COVID thing, it was a
Mm.
vertical fall and a vertical recovery.
Right, right. But it's not a recovery. It had gone
Yeah, it
beyond that.
went to new highs.
It went to new highs and crossed it by at least about 50%. So
Yeah.
let's not consider this as
So
purely recovery.
is this a new normal that we should sort of
When
reconcile with?
when the country is maturing, and when you find from 2 crores and 3 crores of investors or traders who are in the market, suddenly your depositories are getting about 8 crore people into that thing. Naturally these things will happen. Okay, market is maturing. We will accept that the markets are getting slowly matured. We are moving away from exclusive clubs to a broad spread, widespread clubs that we are going to see. We are going to see more and more people. Internet is a great achievement. I think the younger generation, I'm seeing the younger generations are getting more and more interested. What is Ashutosh's age? According to me, he is not even 30, and he is hosting a space, and he is talking about the things which are much beyond what I would have been in my 30s. Correct? I think
Same here, sir.
what you would have been in your 30s. That's I
Yeah,
think
yeah.
that is exactly the point that I'm trying to tell.
I'm
That
below 25, sir. So
that no, that's why I said that you are not even 30. So you are not even my experience in the stock market. So
absolutely.
yeah, I mean you were not born when I bought my first share. So basically this is what I tell people, that these are all things which we have to accept. We have to acknowledge that the markets are becoming, and and his mind will be sharper. I may have experience, but his mind will be sharper. When I tell something, probably his appreciation and grasp will be much faster, and therefore his ability to foresee what's happening in the market will be much faster. His reaction time is smaller, and much less than what my reaction time is. I will take about 5 minutes. He may take about 5 seconds. So that's the difference that we are looking at. We have to accept it. We have to accept the new generation portfolio managers are younger and younger and younger, and I think they are able to study, they are able to understand, and they are using technology to leverage against people like us who used to study in paper and who used to assimilate in mind and then respond to them. There's a lot of difference. There is a lot of difference, and we have to acknowledge that. We have to accept it.
So, sir, a
Yeah.
follow-up question on that. Do you think, the historical trends and the historical charts that we see, they are gonna go redundant with time, because with the new technology, new age, and the new generation, everything is gonna, change. Like, so,
One thing
will the past patterns repeat? Like,
one thing
what do
I
you think?
one,
Personal.
one thing I am sure, after seeing Bitcoin, I
Okay.
think I think history repeats itself, and I think that's not changing. Let's accept it. See, the psychology does not. Your reaction time may be faster. You may exit the stock faster, but your psychology remains the same. You are the same kind of person that I was. I was at my 30, but I had limited technology, so I might have taken 24 hours to exit. You get 24 seconds to exit. That's the difference. So there is a lot of difference. I might have held on to a stock. I might have been foolishly holding on to a stock, which you might not be doing it. You're reading a lot, and your technology helps. That's all. But otherwise, your mind and my mind are the same. Human mind is the same. There is no qualitative improvement that have been noticed in the last 30 years, except that you are having the aid of a computer. That's all.
So
That's all the difference.
basically, summarizing it, sir. So basically, it means that the business cycles are gonna go shorter with time. Like earlier, the businesses were like 100 years old, and their life cycle was 100 years. Today, all the greatest companies in the world are like 20 years old. So it is gonna go, smaller. The business cycles, the boom and burst cycles, the economic cycles, everything is gonna go, exponentially faster, right?
Exactly. See, the speed will be changing, and there will be new competition, and there will be opening up to further competition from others. What you see now as monopoly, and what people are claiming that we have invested in a monopoly, say like Pidilite. In another about 2 years, you may see at least two, three competitors to Pidilite who are having a decent market size, who will be giving a challenge to Pidilite. I'm just telling. I'm
And
just
a better product maybe also.
maybe we don't know. In fact, I am a director of a company which may become a competitor to Pidilite. So these are things which will happen. Eventually the thing will be changing in that way. But human mind, it remains human mind. It's after all a human mind, and that they will react to situations in the similar manner. The speed with which you get the reaction time, that is, as an observer you get, and then you react, that may be faster because of technology. But my mind is my mind, and the same is your mind is your mind. There will be no difference. Your decision making apparatuses, there is a difference between what was there in 30 years before and what is there today. That's all.
Right, makes sense. Ashish, would you like to pitch in something?
Yeah, Sriram, so my second question, follow-up question since this
Yeah.
time. What is your view on the mystery of the FPI selling?
Oh God, $1 million question.
See, basically, they anticipated the fall in rupee and hardening of US dollar. I think that makes a lot of thing. I mean, you may say that they pushed it earlier, but then maybe they are looking for the next I mean 6 quarters. They think that we can come back and get it at a cheaper rate. I mean, whether they are going to get it at a cheaper rate, we have to see it, because there may be enough money inside the country itself which can make up for all their thing. But according to me, they anticipated the kind of problem that they are saying. This I am telling you with some what you call inside knowledge from the US fund managers who have been talking about it in their talks to me and my family members, who told that yes, they had been right from October 2021. They had been pressing for this kind of selling. I mean, they had been anticipating this tightening eventually will happen. So they were given the lead time, and they had slowly been exiting, and they had done very well. I think they had sold it at 76 rupees, and they had repatriated, which is now 80 rupees, right? So that's how it is. Let's accept it that these are part of the world. We have seen 50 rupees dollar, we have seen 56 rupees dollar, we have seen 64 rupees dollar, we have seen 70 rupees, seen 75 rupees. Now we are seeing 80 rupees. That's all.
Right. Thank you, sir.
Cool. So we have last question from K. K, would you like to? Yeah.
Yeah, first of all, I would like to thank you, sir. Thank you so much for joining us and sharing your stories and experience with us. My question is, what has created wealth for you? Was it your system trading or was it investing in penny stock?
Oh, this is a very, very tricky question, I suppose.
Yeah, sir. Actually, it is an age-old question, and people like us
My wealth,
who are,
my wealth,
thriving in the market, we would want to know the real experience rather than the bookish knowledge.
my wealth was made much before the market. My wealth was made. See, we had invested in several businesses when we were chartered accountants. So we had somewhere close to about 21 businesses which we were invested in between 1984 and 1998. So those businesses yielded a lot of returns, and those business during that period, whatever real estate that we had bought also got us a lot of wealth. And the businesses that we invested in, barring two or three, my others might have failed. But then, as I told you about the penny stocks thing story, the two three businesses which remained, they gave out a lot of lot better returns than all others. They created the wealth for us. uh, so it has got nothing to do with market. Market is after all 10% of my total wealth. That's
Okay, and one last question from whatever you just answered. So I'm also a chartered accountant
all.
who is into trading. So, what would you, any advice that you would want to give us from your experience, the businesses that you said you invested in, or whatever, be it
Develop,
trading, be it
develop,
investing?
develop patience. Develop patience. Patience is the hallmark of being in trade, stock market trading. Develop patience. Whatever leads you to develop that patience is the best thing that can happen to you. Be patient. Don't be in a hurry. Don't be in a haste. Don't think that this time it is different. No, they are telling this will happen. That no, everything is the same. Patience is the only way in which you can get through your objectives. It will come. It will come. Nothing is going to go without achieving your objective. So be patient, and I think start developing a habit in which you hear less and less advice, and you acquire more and more.
Right, right, right. Thank you so much, sir. Thank you.
Okay, so thanks a lot, everyone. With this, we are winding up this space. Thanks a lot, Sriram sir, for coming, joining us today, and sharing your experiences and the way you trade and your journey with us. The penny stock system it was very good, and it must be a good knowledge for our audience, and they must have benefited from it. Thanks a lot, sir, for sharing and giving us your thoughts and answering all the questions. I would also like to thanks the audience for being so patient with us and listening us for the last 1.5 hours. Chalo, thanks everyone. Have a great weekend and have a profitable journey ahead. Bye bye. Bye
Thanks.
bye everyone.
Thanks. Bye.